You know, one of the best ways to learn is to see examples. That's why today I'm going to show you my own case study so that hopefully it inspires you to make certain changes and get certain improvements. There are a few things that we would like to state upfront first. And the first thing that comes to my mind that I'd like to share with you today is if you pay attention to something, you're able to do it a bit better. And that's the same with net worth. If you start collating in the Excel sheet where you're at, where do you want to get to, you naturally start to see developments being more aligned with your long-term goals. Make sense? So if you're all over a place, the first thing to start is to start tabulating what you have. The second learning point from today, hopefully I can deliver, is cash is as of now not too much value. The interest rate environment is low, and that we are all a bit concerned about inflation, and assets are the best way to protect yourself against inflation. And if you agree, smash your like button. So today, without further ado, I'll show you my full details. I've added some new things into this whole list itself, and maybe one or two might surprise you. And as of this time of filming, equity markets have came down a bit, about 5 to 10% in the last week. And these numbers are accurate as of 4th of December 2021, where I'm aged of 37. So without further ado, let's roll in the intro video. Hi guys, welcome back. Without further ado, let's start on the first item for today, which is CPF. Now, if you've seen the previous video I've done on CPF, you realize that I've moved my entire OA to SA already. And right now the SA value sits about $100,000. Let's not factor in MediSave account for this net worth, because MediSave account you can use for insurance premiums as well as medical needs. Beyond these, it's only when you pass away that this amount gets delivered to your family. So let's only factor in special account which could potentially impact the retirement sum itself. And that amount stands at $100,000 today. Number 2 on today's list is SRS, Supplementary Retirement Scheme. Now I'm trying to follow the format I've done in the previous video of 1.19 million net worth. That was done at the start of this year 2021. So I'll try to follow that format, and I realized that time I used the book value of SRS. But right now I'll show you about the latest figures for SRS value itself. And as shared in the previous video, my SRS current portfolio is at least $280,000. It's made out of stocks, Singapore listed stocks, as well as a portfolio that I manage myself. So I also believe that this SRS amount will come in very handy from the age of 62 onwards. And if you're keen on more SRS information, check out links above. I've done a full tutorial on SRS. Number 3 on today's list is stocks, Singapore listed stocks. I understand that most people like US equity, but for myself, I believe that I'm comfortable doing Singapore equity research. So I look at books quite a bit, I pick names that I'm pretty familiar with. I'll just show you the big picture numbers. Right now the stock valuation in CDP itself is $310,000. This is slightly above the $270,000 that I first documented start of the year. I've added a bit of things, I've made slight changes, but as of now, this portfolio of $310,000 is able to deliver some dividend income. And especially if you are retiring needing retirement income, Singapore dividends are tax-free, so it's a pretty good avenue to build into. And stocks are not only in my CDP, I've also some now in discount brokerages, which is point number 4. Item number 4 on today's net worth list is actually my custodian accounts, and I have 2 of them mainly, TIGER as well as MOOMOO. These are 2 platforms that I leave links frequently below, and I've done actually tutorials on them before, so I'm pretty familiar with it. And I do like both of their platforms for the research tools there are. They can show you earnings per share growth, they can show you share price trends, they can even show you financial figures with a click of a button away. So these 2 discount brokerages are pretty useful to have, and I'll show you numbers that are within these 2 platforms. I mainly use it for trading purposes. And as always, I will not disclose what is inside the trading position today, because I always believe that in order to make good, unemotional decisions, remove away all external expectation and pressure, and that's what I practice on my own also. But actually, if you think about it, it's not difficult to make a guess. I usually cover a top 10 investment ideas to buy for the month, so those are very likely some trading positions that I move in and out. As of now, the value in TIGER is about $89,000 and in MOOMOO about $23,000. So if we add this two total, that's about $110,000. And when I look back in February, that amount was pretty small. I think about $20,000+, so insignificant. But the amounts inside these two accounts now, in combination, is $110,000. And let's add that number into the list. Number 5 on today's net worth list is the value I have in portfolios. And the biggest one that I run right now is with my wife. So I've actually a joint account that I park some of these monies into mixed funds that are well diversified, as well as some in short duration bond funds. This amount, I believe, will be my war chest cash, which means if market goes into a bear market, you should expect me to deploy all of this fixed income into the equity market itself. So the total value of my share in each of these portfolios is about $190,000. This is a big increment away from $100,000 which I presented previously, and I'll explain why in a quick while. Number 6 on today's list is cash. The cash value right now in OCBC is about $90,000, but that's because I've actually sold some stocks recently and pay just came in. So if joint account savings are added, I believe the total cash that belongs to me is about $110,000. Now that amount of cash is clearly too much, sitting idling in a bank account. And if you're a private client of mine, you know I frequently nag at deploying cash. And the reason is because interest rates are so low these days. Money is being inflated away, and what ideally should be kept is just the emergency cash portion, and the rest either be in war chest cash or fully deployed into markets itself. So in the next few days, likelihood I'll move some of this idling cash into the portfolio to get it fully diversified and conservative as I wait for a bear market. But having said that, if you have too much cash in comparison to the total assets you have, seriously consider how to properly invest. Create an investment plan. What I have right now is still relatively small in terms of total net worth. I think it's about less than 10%. So look at what you have for yourself and make the adequate changes. Number 7 on today's list is my crypto portfolio, and I house it in two places. The first is in CoinHeckle, which I use to purchase cryptocurrencies. And in CoinHeckle right now, it's only all the alternate coins. The value of it is about $20,000 to $25,000, and because crypto fluctuates so much, let's just keep that number in perspective with a range. The other amount that I have is in Hodlnaut, where I do yield farming. So in Hodlnaut, I actually hold 6 Ethereum and about a fifth of a Bitcoin. So that value fluctuates about $45,000 to $50,000. So then in cryptocurrencies, I have about 70,000 plus minus, and let's add that number in to the total net worth list. Number 8 on today's list is my Syfe portfolio, and the value of it right now is about 49,000 plus. And I can share also, the bulk of it resides in Syfe REIT Plus. And because I've done so many tutorials on Syfe REIT Plus, I do sincerely believe that it gives you a very simple allocation to Singapore REITs, possibly much better than you buy individual counters yourself and try to create a portfolio. Just get a Syfe REIT Plus, especially if you're looking for dividend income. Now, I've also seen before in comment sections that some have this idea of parking some in Syfe, parking some in Stashaway, parking some in Endow Us, and try to see which one does the best after 1 year and then consolidate everything into the best. That is actually quite possibly not a good idea. And the reason is this: past performance does not justify the future. That is very crucial because you could be selling something away that will perform better after doing quite poorly for a period and buying into something that has performed relatively well over the last 1 year and is inflated already. So I'd much rather you pick any of them, get into them and trust the philosophy of how they actually allocate for you. Then leave it to ride long term because they all have their own principles on how they manage the portfolio itself. So if you're keen on Syfe REIT Plus, I'll also leave links below for you to check out further. Number 9 on today's list is leveraged annuity plans. I've actually bought one for myself and that value is $112,000. But actually there's a loan factor to things, and the loan is $80,000, which means the total capital deployed is $32,000. So let's add half of that amount to my net worth, $16,000, because I view it like a joint retirement with my wife. But in any case, leveraged annuities are getting popular these days, simply because the interest factor is so low, and they do have a guaranteed amount that they'll pay out on a monthly basis. So it does fit very nicely for long-term retirement planning. In any case, if you're unsure, check out a full tutorial I've done before. I'll leave links below for it, just in case you have any questions on the risk or benefit of such plans. Number 10 on today's list is property, and if you have followed this channel, you do know that I own a condo as well as a HDB. And especially since I've done a recent valuation on a condo, the value has increased slightly. In combination, I believe these two properties should be worth $1.7 million. And because we have a loan of $850,000, the net value that should be attributed to me and my wife is only $850,000. Then of course, half of it belongs to me, $425,000. Now this leads on to the next point which I would like to share with you further, which is actually taking a term equity loan from the private property itself. Because quite simply, interest rates are low these days. If you know how to allocate your monies after borrowing, you can potentially view it as good debt, and I'll elaborate further in a quick while. Before I get there, invite you to smash the like button and invite you to smash or subscribe, especially if you've benefited from the sharing so far and you like topics on CPF and retirement planning, which I intend to continue sharing with you, especially in 2022. Now let's run through the list of assets that I've described so far, and it starts with CPF, 100,000, SRS, 280,000, stocks, 310,000, custodian account stocks, 110,000, portfolio, 190,000, cash, 110,000, crypto portfolios, 70,000, Syfe portfolio, 49,000, leverage annuity plan, 16,000, and property, $425,000. Now that gives a total of about $1.66 million. But there's also a loan that I've taken out from my property, which is actually a term equity loan. I think quite clearly I bought an undervalued property, and with latest transactions, banks were willing to revalue it at a much higher value. That's why this term equity loan could be done. That amount is $150,000. And do note also, term equity loans are only for private property. So if we factor that term equity loan, we should net off $75,000 for my net worth, and that brings the total net worth that I have as of end 2021, age of 37, to be about $1.585 million. In any case, this number is probably still conservative. I've not factored in insurance plans as well as various small accounts I have with, for example, Singlife and Etika. But let's pull back the asset list. Here are some possible learning points. The first, there's assets to cover the property loan, correct? And the reason is because the property loan was manageable. Now, if you want to retire, you need to be able to pay off also your own property loan. The second is that there's a lot of assets, correct? Some are high risk, some are low risk, and cash is not idling around too much. And that's actually why I advise private clients also. You need to compound returns over time, and each time you do so, you move yourself closer to your own financial freedom. So what are your questions? Leave in the comment sections. Maybe I can help you address something or two. In any case, let me introduce you to a previous tutorial I've done. Why I've borrowed $150,000. Understanding net worth is one thing. Hopefully it can help you make changes. And understanding good debt and bad debt is the next thing to learn, especially if you want to build your own wealth. And with that, I'll sign off from here and see you in that tutorial too. Take care and goodbye.